Hi, buddy. My name is John Fisher. Welcome to SalesLeads.tv. So, I'm doing something new here with my videos. I'm going out to the internet, taking a look at what information is available. You can't teach an old dog new tricks. Well, this old dog is always eager and ready to shift and to learn new tricks. But, I haven't really read the stuff. I just did some research on it. I'm going to go ahead and read you what's out there, and then I'm going to agree or disagree and tell you what 32 years of this butt sitting in this chair has learned. Okay, let's go from there. Accredited investor. This should be pretty easy. An accredited investor is an individual entity that is considered to have sufficient financial knowledge and experience to participate in certain investment opportunities that are not available to the general public. The criteria for being considered an accredited investor are set by the Securities Exchange Commission. I agree. In general, to be considered an accredited investor, an individual must have at least one of the following. I believe it's all of them. Anyway, an individual must have earned an income of at least $200,000 a year for the last 2 years, or $300,000 in joint income with spouse, and have reasonable expectations of earning the same income in the current year. Net worth: an individual must have a net worth of at least $1 million, excluding the value of their primary residence. I agree. Professional experience: an individual must have a professional designation such as licensed security dealer, investment advisor, or attorney that indicates sufficient knowledge and experience in financial matters. I'm not sure I agree with that one. I think experience in managing their personal portfolio. But anyway, now you have two opinions. Entity. The entity, such as a corporation, partnership, or trust, must have assets of at least $5 million and managed by a person, entity, or sufficient financial knowledge of experience. Now, this is what is an accredited investor. So I don't know about this entity. An entity such as a corporation, partnership, or a trust with assets of at least $5 million and be managed by a personal. I'm not so sure about that particular one. That sounds more like a professional accredited investor. Anyway, let's move on. The purpose of an accredited investor criteria is to protect investors from the risks associated with certain types of investment opportunities that are not subject to the same regulations as traditional security offerings. For example, private placement of securities, hedge funds, and other alternative investments may not be subject to the same disclosures and reporting requirements as publicly traded securities. Accredited investors are typically offered investment opportunities that are not available to the general public, such as private placements of securities, hedge funds, venture capital funds. These are type of investments that may offer high returns than traditional securities, but they also come with higher risk. It's important to note that being an accredited investor does not guarantee investment success. An investor should still conduct thorough due diligence before investing in any opportunity. Investors should be also aware that the risks associated with private placements and other alternative investments, such as a lack of liquidity, higher fees, and less transparency. There's a qualified accredited investor, and they do hedge funds and master private placement. The qualified accredited investor is a $250,000 minimum and must have $5 million in investable assets. So unless the rules have changed, the computer is confused. SEC has recently expanded the definition of accredited investor to include certain individuals with professional certifications or designations, such as Series 7, 65, Series 82 license holders, and certain entities with investments of at least $5 million. The SEC also proposed further changes to the accredited investor definition, including adding a measure of financial sophistication based on education or job experience. Has also proposed, so that hasn't happened yet. In conclusion, an accredited investor is an individual entity that meets the certain criteria set by the SEC to participate in certain investment opportunities that are not available to the general public. Accredited investors are typically offered investment opportunities that are not subject to the same regulations and conditions, but they come with higher risks. So the only thing I disagree with on this is you cannot invest in a hedge fund and you cannot invest in a master private placement if you're just accredited. You have to be qualified accredited to be able to invest in a hedge fund and to be able to invest in a master private placement. The rules are $250,000, as far as I know, and at least $5 million in investable assets. So I think that's where the the confusion was there. But after all, you did a good job, computer. You almost got it right. We sell accredited investors. We've been doing it for the last 32 years. Our people have vetted. The broker-dealer will ask them, hey, in order for you to participate in a Reg D 506C, you must be an accredited investor. Let me give you the definition. You must have 200,000 income last 2 years, 300,000 combined, million net worth, not including your home, experience in managing your personal portfolio. And then they go, hey, is $25,000 to $50,000 a comfortable entry level? The guy says yes. And then they say, hey, by the way, is that risk capital? The guy says yes. And they mail them a private placement memorandum. That's what we sell. They're 50 cents a piece. Where do we get them? Companies go out of business. It's an asset of a company. Maybe a year ago they send PPMs to people. Whoever didn't buy, they called them twice. They didn't buy, and they sell them. I mean, it's a marketplace that's been around since I've been around, 32 years now. And, it's just an ongoing marketplace. As far as the actual accredited investors, we have them at 50 cents a piece, 10,000 at 40 cents. Clients, now the guy who's a client actually wrote the check. One's a prospect, one got the private placement memorandum. The other guy, he actually wrote the check. And, again, how do we get that kind of information? I'll have to kill you if I tell you. I mean, pretty much it's a small marketplace, and, company goes out of business, or the company completes the project, and he'll just say, hey, I want to sell my prospects, I want to sell my clients, and that's how it goes. Companies go out of business. We've been doing this for 32 years. We have an A+ rating. Our prices are right. If you have a SAN number, that's a Federal Trade Commission, do not call. We'll scrub your leads. We're service providers. If you don't have a SAN number, subscription account number, we'll get you one. You got to pay the $65 in area code. If you don't want to get a SAN number, we'll sell the leads to you, but you got to sign our indemnity, because we're not allowed to have a SAN number, and we're not making the call, so we're not subject to the rules. You are. Another thing is we have 1.4 million troublemaker litigators. These are DNC litigators. These are guys that buy throwaway phones. They call you up, put their name on the list, and then they say, hey, if you don't give me $8,000, I'm going to call the FTC. That's 32 years worth of troublemakers, and maybe 600,000 that came from court records. That's the largest list in the whole country, 1.4 million, that I scrub and don't charge you a penny for. If you have any questions, feel free to call me. 561-239-0364. Salesleads.tv, your #1 place for accredited investors. Have yourself a beautiful day, and God bless.